Okay, g'day, Rudy here. So the currencies impact IVV is the same as buying. Okay, so I asked a question to subscribers. If you open a US brokerage account and buy shares there, is the currency risk different to buying a US shares-based ETF on the Asx like Ivv Ndq? Well, the results are in. It's 50-50, and I reckon if I had a I don't know, that might be a top answer. So I thought that might be the case. So let me try and solve it with charts, because I'm not good at drawing diagrams. So there's two things at play here. So there's the Aussie US dollar. Okay, so this is a monthly chart, and basically since 2012 it's been in a downtrend, and that's benefited you. We'll get into that. So that's why no one's really been worried about it all. Okay, so that's the Aussie dollar. Now we have been sort of trading sideways, and the concern is, I had one person say he doesn't want to open the US account because the US dollar might go down and the Aussie dollar goes up, which is true, but the same thing happens to Ivv Ndq Vgs. So at the moment the Aussie dollar, well, I guess has a bias to the upside, which is negative for US holding US shares. Okay, so that's culprit. So that's input number one. So input number two is, so this is the NASDAQ index, as in over on the New York Stock Exchange. This is the actual exchange when they say it's gone up 10% or whatever, or 2%. Okay, so just for people invested in NDQ, its first level of support has been, it's bounced, so this would be the critical level down here. So no panic stations required, although it did break below the channel. That's not the point. Okay, so this is the NASDAQ, the true one over in America, and this is the NDQ. So this is what you go and buy in Australia. And just one note, you can see here, if you can see like the distance, this distance here from the high here, whereas if you look at the NASDAQs, that's this one here. You can see there's a bit more of a gap. That's because they don't actually, if this NASDAQ and the NDQ basically had no currency risk, then they would trade one for one. Okay, alright. So what we've got here is the NDQ, the ETF, over the NASDAQ index. And you can see here that the NDQ does not track the NASDAQ. So why? Let's overlay the Aussie dollar USD. Okay. So this is the purple, the Aussie dollar US dollar, and this is probably the best one. So just so you can see, so the real one, so 2020. Let me get rid of the. So this is the 2020 low here. So that's what we're looking at. I'll just put that back. I'm just trying to make it clear for people. Okay, so you can see when the Aussie dollar went up, which is the concern, the ratio NDQ over NDX went down. So it meant the NASDAQ was outperforming the NDQ. So there is a currency risk investing in NDQ, Ivv, VGS. It's all the same. The return So it depends on what the underlying index does, like the Nasdaq, but it also depends on the currency rate. So if, for example, just say the Nasdaq did nothing, didn't go up or down, as the Aussie dollar went up, the value of your investment would go down. Okay, so let's just try and look at it as an example as well. So this is like effectively what happens in an ETF. So say you've got $1,000, you go and buy $1,000 worth of NDQ. Well, they go and say the Aussie dollar's at 65 cents. So they go onto the US share market and buy $650 worth of US shares. Okay, the shares aren't listed on the ASX, so that 1,000 becomes $650 in. So it goes and buys $650 worth of US shares. Okay, so yeah, this is the worst case. Yeah, so say 1 year later, the NDQ still, so it hasn't moved. It's worth $650 but now the Aussie dollar's at 80 cents. Okay, so share not move, but you sell them, and you only get $812 back. Okay, whereas you put in 1,000. So it's no different to going and buying a share or an ETF on the so this investing NDQ is no different to go and buying a share on the US stock market. Now the only difference may be the ETFs might get a slighter, better exchange rate. Instead of 65.2, they might get 65.0 because they're buying and selling in bulk. But in terms of the ups and downs due to currency, it's exactly the same. Alright, I hope that makes sense. I'm doing my best. Let us know your thoughts. I should say, because I've had a few of these, do you have to pay extra tax in America if you make a profit? No. Do you have to pay any tax in America? No. Usually when you set up a brokerage account, you basically give them your tax file number, so they know you're from Australia. So then all the big governments can track and follow what you do. So everything's just based on all your capital gains or income all comes back to your Aussie dollar tax return. There's no tariffs paid. There's no tax paid. There's no just like your ETF, when you get your tax statement and you get all your capital gains and whatnot stuff, it works exactly the same. Alright, hope that helps. Let us know if you're still confused. Alright, see ya.